We are live, ladies and gentlemen. I have another Ilus video for you. This is going to be a fun one. Sit back, grab your Cheetos, your nachos, your chips, popcorn, your vegan chips, whatever you like. Grab them, get ready, sit back. This is going to be a fun one. As always, patreon.com/shadesandtrades for Discord alerts. Free trading booklet in the description below to give you an idea as to how I trade the markets. Let's jump into the video here. Let's go to Nick Link here. I scoured through a bunch of videos from Nick Link, put together a compilation, and let's just go over what he had to say, and I'll drop my commentary on it. Gonna mute the mic right now. Let's go.
You know, we're not guys to talk and not be able to follow through.
They are not guys to talk and not be able to follow through. Well, they've been doing a lot of yapping and not a lot of following through. Whether they can blame it on ASNS, shareholders can give them an excuse if they want. That's what they're doing. They're essentially absolving them and saying, oh, it's not Nick Link's fault. It's not Ilus's fault. It's ASNS's fault. Doesn't matter. Nick Link talked the talk. They did not walk the walk. Where's the uplist of the subsidiaries? And there's a Ilus uplist before year end. By the way, if you watched my previous video, let's see. We still got 2 months. Maybe they'll surprise me. But I think we're all pretty doubtful because the subsidiary uplist failed on top of that. So that I just found this funny when I was like when I was watching this video. I was like, wait a minute. You don't follow through. What are you talking about? You haven't followed through for years. All right, let's continue.
And out of those 25 companies that I follow, 11 of them are not even trading anymore. You know, they've been CE'd. And as I said, they weren't particularly good companies that I followed. It was just a random matrix of companies that I just literally picked out of a hat. While we, you know, in the dog basket and kind of, you know, really in the doldrums in terms of our share price, you know, the good news is our liquidity is still there, which means people still want to buy our stock. You know, we still have that loyal supporter base. You know, so that is good news, which means as money starts to flow back, you know, we're probably in a slightly better position than most. In the longer term, our shares should always be more robust than the average OTC company or average.
But here's the thing, Nick Link, it's not more robust. It's not. I don't care how loyal of a fan base or shareholder base with high averages you have. It doesn't matter. Look, your stock is garbage right now. Sitting at 002s. It's at a lower share price than AITX, and AITX is worse on the financials. Like way worse. With dilution so heavy your head will spin. So okay, loyal shareholders, you're getting destroyed. I hope you know that. But you know, let him talk. I'll let him continue here before I jump down his throat.
Any listed company, a conglomerate shares usually should be more robust because they're able to stand more of weather a storm because they have multiple legs. You know, so if one sector is doing badly, another one might be doing well. You know, they're able to divest and sell off subsidiaries to raise capital should they need to. We're not in that fortunate position yet that we're just a little bit too early on that, but we're rapidly reaching that point where our subsidiaries are worth something. The shareholders feel safe that between all of our, let's say, eggs in the basket, one or two or multiple of those will have a big valuation at some point in the future. They're not all going to be highly successful. That's business. We hope, you know, as a board, we get majority of them right. But certainly some of them should reach the, you know, the maturity that we would hope they would. And that's where we sort of start to get a big payday. You know, and again, I've said this multiple times in the past.
But here's the thing, as we all know, nothing's guaranteed. And as we just saw, not even the ASNS deal went through. So that fell apart, and look where we are now. Because they were really banking on that, as I talked about in my previous Ilus video. Right now, your shares are not robust. Your company's not communicating. It's not doing much of anything. It's at a standstill. And whether this train gets going in the future, you look at the past 3 years, it tells a story. 5 years are going to go by. There are people who have said that they're holding for 5 years and then they're going to reevaluate. But I imagine the ones holding I'm not gonna call them bag holders. I'm gonna pull a Nick link and say the shareholders with a high average. I imagine 5 years, aka in 2026, which is not far off, by the way. Time flies. I imagine. By the way, if you've been watching this since 2021 and you're not subscribed, what the hell is wrong with you? But seriously though, jokes aside, you look at the history and it's just downside. So your shares are not robust, and too much hoping, too much hope. Things didn't work out this year, so let's see next year. You better make up for it next year. There should be no one excusing them. 5 years are gonna go by. It's gonna be 2026, and we're still gonna be in the same spot. That's what I predict until they show me something. Because for the 3 years that I've been following them, it's been the same carrot dangling. Let's continue here. Let me know what you guys think. Let me know what you think. We still got a long way to go. This is probably going to be longer than I expected.
Fast, and I'll continue to stick on the same thing. We're not a stock for 1 day, 2 days, or a week. We're building a long stock for generationals. We're building a stock that at some point in my lifetime, I hope will get to hundreds and thousands of dollars a share. And that takes time. I'm talking decades. I'm not talking days or weeks. But that journey to go from 0.006 cents to, I don't know, $1, $2, $10, $20, $50, $100, whatever it might be, that's the sort of the value creation. We can't fast track that. There is just no way to sustainably build a huge business overnight. You just can't. And I know Wall Street's impatient. I know day traders are impatient. I know shareholders are impatient. One of the questions last week on Buffalo Fireside's question was, how do we create euphoria? We're not about creating euphoria. We're about building a business with a solid balance sheet, cash on the books, businesses that are all performing and growing, and allowing our business as a conglomerate to reach the goals that we need to, and be able to take in new businesses, incubate them and grow them, and build out that massive balance sheet and that massive value that we want to create for the shareholders, which is over time. Now, that doesn't mean that short term.
So, as you just heard, and I talked about this in the previous video, they really wanted that ASNS deal to go through for the funding, so they can really grow the companies. That didn't go through, so none of this means anything. We'll see if we'll get a strong balance sheet and huge growth next year, and then the year after that, and after that, and after that, and who knows how long this is gonna go on. And look, the market is creating new highs. Interest rates are getting cut. What excuse are people going to have for them? Because there's people that just make excuses. Oh, just you wait, shades, until the interest rate cuts. Just you wait. Wait till things get better. What if things never get better? What if Kamala Harris gets elected? What if things don't get better? What if war happens? We don't know what the future holds, but what excuses will you guys continue to give these guys? And what excuses will they make? Because it's the same story. Guys, we're going to go to, it's going to take time to go to 100,000. He said $100,000 per share. It's going to take time. Well, you've been saying that for 3 years. And you're telling me decades? It's going to take you 4 years to finally complete one uplist of one subsidiary? 5 years? They always have some excuse. Oh, the market is tanking, so things are looking ugly. Okay, let's see you perform in the coming years. Let's see. That's all I'm gonna say. Let's continue.
There isn't opportunity for share prices to go up, considerably. But it's not about us posting a picture of a delivery or a customer installation. You don't see big board companies, you don't see NASDAQ companies posting a picture of them doing an installation of a fire system.
No, this is false. Don't let him fool you. NASDAQ companies and the higher exchanges, they communicate. They do post pictures. They post videos. They have interviews. They do presentations. Right now, NVIDIA went from $150 to $1,400. Did a forward stock split, not a reverse stock split, a forward stock split. And it's right back at 140, hitting new highs, or about to hit new highs if it breaks out today or in the coming weeks. Who knows? Well, election year, so who knows what might happen. But other than that, you get the point. You look at Nvidia, the CEO, he doesn't sit on his, on a chair with his thumb up his butt going, guys, we're not going to communicate. He communicates. He does interviews all the time. The CEO of Nvidia does interviews all the time. Always in communication. Always. They post pictures of their product. They do the marketing. They have tons of videos out there on YouTube. Plenty of presentations from the CEO himself. He puts himself out there. This is BS. This is nonsense. No, you just refuse to communicate, and you're using this. This is an excuse to not communicate. That's what that is. Stocks on higher exchanges and their companies do communicate. They do post pictures, videos, testimonials, interviews. And I'm pointing to Nvidia specifically because, man, oh man, is it just me or did that thing go from 150 to 1,400, then did a forward stock split? I wonder why that would be. Would Nvidia have performed that same way if the CEO was just sitting on his chair with a thumb up his butt saying, hey guys, we're not going to communicate. That's the end of the video. That's not, no, this is BS, guys. Don't fall for this. Let me know what you think of this specifically. NASDAQ companies, they do communicate. What are you talking about?
I mean, you just don't see that. That's not the space we're in. We're not a pumpy stock. We don't want to be a pumpy stock. The valuation of that subsidiary is going to come out in the next few weeks. As we get to closing time of the ASNS deal, we know we have the QI&D business. We maximize the valuation on that business. We grow that business out as fast and as hard as we can within the constraints and the capital we have. And we know eventually that's going to wash through in one way or another. And now the same as SAML, slash ERT, that business hasn't been able to grow its wings, to flap its wings yet because of our constraints on capital. Hence our move up to the big boards that will now start to free up some proper capital to allow it to grow. Both Georgia and Bullhead and Firebug, they've got more orders than they can deliver, but we physically can't.
You have all these subsidiaries. Your ASNS deal fell through, so you're not going to get the funding. You have, apparently, according to you, right now, what he's saying is the subsidiaries and the companies that he has under Ilus's belt, they have more orders than they can actually deliver on. Why don't we get information like this? Why don't you communicate this? That's my question. Hey guys, we're getting so many orders out the butt that we can't even meet the demand. What? And which company is it? Is it Bullhead Products? Which subsidiary is it? Because you have a lot of companies under your belt, but you never communicate what's going on with any of them. And there's plenty of NASDAQ companies that have a lot of they have an umbrella of companies under them, and they communicate what's going on with each of them. Yeah, just look at Sybil. Sybil has a bunch of subsidiaries underneath them, but they communicate, what's going on with each of them and each of their revenues from each one. So again, I don't. You guys make what you want of this. Let's continue. This is, like I said, this is going to be fun. Get your popcorn, guys.
Deliver them because of the capital ability. As soon as we take on new business, we, both Georgia and things yet because of our constraints on capital. Hence our move up to the big boards that will now start to free up some proper capital to allow it to grow. Both Georgia and Bullhead and Firebug, they've got more orders than they can deliver, but we physically can't deliver them because of the capital ability. As soon as we take on new business, we have to have more inventory, which costs money. We have to have more staff to take the orders, deliver the sales, do the accounting, pack the orders, process the orders, do the estimation, whatever. Those staff cost money. So just talking about capital raising in general, slash dilution, our dreaded word, the word I've come to hate so much. So I'm not going to go into mega detail on this one because, I think we've covered it a lot. It's been mentioned continually and consistently through, this whole podcast. Now, I think the ability to raise capital has been difficult, will continue to be difficult in the short, medium term, and should hopefully become easier as time goes on. We've had to do what we've had to do in terms of raising capital, through this, let's say, shitty period of 18 months-ish, maybe a bit more. Yes, that does mean that we've we've had heavy dilution, and in the short, medium term, that's there. We can't avoid it. We have got relatively good terms with the funders, and they really are trying their best not to crush us. I know that, you look at our multiple red days we have, and you kind of think, yeah, whatever. It has terms built in there that we can pay $650,000 a quarter, and there'll be no conversions. So that's forward looking, which means that note is basically budgeted out over the next 2 to 3 years. We know this quarter there has to be a conversion. We have no choice. We need capital from them, and ultimately they need to get out of their position because we can't pay the 650. But hopefully by the next quarter, if not by the next quarter, certainly by the one after, we should be able to take down proper capital from A, our Ilus own uplist, or B, one of our subsidiary uplists.
Well, so you get what he's saying, right? He needs capital. They need capital. They need funds really bad. They really were hoping for the uplist to follow through to get that capital. That's not happening, and clearly they're strapped for cash. My question is, why don't you? You're a public company. Why don't you just dilute heavily and raise the money that you need to grow these companies? Why not just do it? Your share price is literally sitting lower than AITX, and AITX dilutes $5 billion every year. So I don't know why you can't just dilute. Just dilute heavy. Just get that $1 billion. Just dilute like $1 billion or $2 billion, however much you need. Get it done. Get the money you need. I mean, you already hurt shareholders anyways by not communicating. If you need money that bad, that's my question to you. You're a public company. Why not just raise the money through dilution? AITX has no problem doing it. Its share structure is pretty bad, sure, but still ran 500%. So there's no excuse in my opinion. No excuse. You're still destroying your shareholders. They're still sitting at a lower share price than AITX at this point. So that's what I have to say to that. I don't know. Let me know what you guys think. We're not done yet. I can't believe this is going to be longer than I expected. But that's like the big issue. Seems like they're strapped for cash. They couldn't pay. And then obviously companies are converting. So that leads to the share price coming down. Because obviously they're not going to hold the bag. They're not stupid. So it's just a vicious cycle that they're stuck in is what it's seeming like. And obviously the ASNS deal didn't follow through. So it's going to be interesting to see what their next Q has to say. Let's continue here.
Which allow us then to put a stop on conversions. And then we're at the point where we're now paying down debt, no more dilution, no more conversions, or minimal or better quality. So we have got all these things in mind, and we have sort of put in, let's say, stoppers along that journey to make sure that type of stuff is protecting us as much as we can. But I know it plays on everybody's minds. When interest rates hopefully start to reduce, a lot of the money should start to flow back into the market. Hopefully we got more access to more capital quicker anyway. And obviously we are, really, really close to our first uplist, the ASNS QIND uplist. As I said, the timelines are all publicized. It's in the 8Ks, it's in the material information that's already disclosed. We're in line with those timelines. So the light at the end of the tunnel is really close. Which hopefully should start to trigger, the first time that we're actually holding some real value on our balance sheet that's actually liquid enough that we can actually start to capitalize on, on some of our holdings and some of our asset values. And the same with, on SEC, we have to be particularly careful around because, we've got multiple uplists happening at the same time, which not many companies do. We're obviously under a lot more scrutiny, or potentially maybe under a lot more scrutiny. So we're very particular on making sure that we do things right. Hence why there's less PRs, there's less tweets, there's less noise going out there. We kind of don't want to draw attention, or give SEC any reason to, doubt us, question us, or have to ask us any questions about stuff that isn't absolutely crystal clear. So we're working quite closely with our attorneys to make sure that we, dead on a clean track. And now I just want to touch onto the actual uplists itself. There's multiple ways of us doing these uplists, and kind of, on the previous QIND we had filed in S1, to do an organic uplist, but I kind of just want to talk you through a very broad spectrum. I'm not going to get into the nitty gritty, but the very broad spectrum of the uplist. So you do an organic uplist, your float criteria is higher, your shareholder equity is higher, you go through the same process on an S1 to an S4, give or take, more or less the same time period. However, in order to meet the float, more than likely you'll have to raise capital. that raising capital is extremely difficult because we're trying to raise capital as an OTC company. You're basically raising capital, from the markets, saying we're an OTC company, we're trying to do this uplist, we need to take in $5 or $10 million on the uplist in order to meet our float, because we have to have $15 million of float, which obviously we don't have when we're nano microcap, with the share trading the way it is. So, but now obviously the fund is always concerned that what if you don't close? The terms, they don't know how to value you because they don't know where the share price is going to be regarding of your valuation. There's all these different things. You don't want to give out the shares with lots of overhang, which is obviously what a lot of these companies that did uplists are now facing. They took the cash to meet the criteria. They uplisted and they've got gazillions of warrants. And just like the toxic funding on OTC, those institutions basically wanted to sell out of their warrants and just crush their stock price, push them below a $1, which they need to remain above $1 on average over 30 days. They got pushed below $1. They then get a delist notice. They then have to do a reverse split to push their price above $1. And so that then their shareholders' equity is affected. And slowly this whole downward spiral basically consists. Only now people are on the big boards, which typically are much more predictable, which is obviously is this ASNS deal, is because the capital is able to be taken down, during the course of the deal, not necessarily at the end, because the vehicle is already in NASDAQ, or in NYSE, it's already a big board company. It's able to take down capital slightly better because it's already operating. And so there's a little bit more predictability. You're not hoping you're going to uplist, hoping you're going to be able to raise the money. In this instance, kind of the money's taken down, or even in the bank. To the last topic about the dilution and our outstanding. Yes, we did say, we were trying to keep our outstanding under $1 billion. I've touched on this already. A lot of water's flown under the bridge since then. Market conditions have changed considerably, which has made it more difficult to raise money. The share prices have moved considerably, which has made it difficult to raise money at a sensible share price. So if you look at how much we have raised over the last, let's say, 12, 18 months, at a share price of 2 cents, 3 cents, or 6 cents, how many shares would we have issued? I haven't done the numbers, by the way, but it's probably not a million miles off, the billion that we hoped we were going to stick close to. But at the current share price, there's not a lot we could have done. It's either that or, we just shut the shop and turn the lights off and all go and play on the beach. That's not what we're here for. We're trying to grow up a proper business and trying to grow this conglomerate, and that is what we will do. If we have to pivot and move along the way and take some short-term pain, then so be it. That's a decision that we have to make as a board. And we've made the decision, and we'll continue to make those decisions as need be to reach our ultimate goal.
As I was saying, a lot of blah, 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 a lot of blah, 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 but not a whole lot of following through on anything. That's really what this stock has been. That's all it's been. That's all it's going to do until they follow through. And it's been 3 years, guys. 3 whole years. In those 3 years, there are several OTC. In those 3 years, which there's that one stock that got out of CE. It got out of CE. It got out of CE. Let that sink in for a second. It got out of CE. In the same time frame that Ilus did absolutely nothing. And I'm talking about Sybil. AITX has grown its revenues. It's about to reach 1,000 unit orders. In the same time frame that Ilus has done a whole lot of nothing. So in my opinion, I think that's it for the video. I think it's up to you to decide whether... I know some of you are just going to say I'm going to have to hold because you're holding a high average. You're not a bag holder, you're just holding a high average. As people like to say, you're holding a high average and you have no choice but to hold it. And I understand that. But for those of you who have the opportunity to get out before it can get uglier, I would do so. That's just me. That's what I already got it. I took the loss and I moved on. And this is your warning. Be very careful, because this entire year, nothing has gone right for them. Nothing has. They're hoping for too much, and I don't. Yeah, hope is never a good strategy now, is it? As we well know. We know that all too well.